All right, I'm back. That was funky. My cat spilled water all over the computer, and unfortunately, it screwed up something with the power, and it works fine. And then once or twice a day, it's going to crap out. So I think it did the same thing yesterday at the same time, if I'm not mistaken. Yeah, it's weird how that works. All right, so let me get back to this. So anyway, so the long end was coming down along with the short end, and that was signaling bad things were to happen. And since then, you've seen a spread definitely between the 30 and the short-term rates and so forth, but it's not nearly as um, uh, the same as it was back here. Okay, this is much smaller risk, and this smaller risk is what's going to keep um, lending risk to be a lot less, right? You don't want to take a lot of risk if you don't have a lot of spread. Now, having said that, you got to also understand that banks, especially the big ones, and the primary dealers, they can go anywhere on the planet. They don't give a shit about U.S. rates. I'll borrow from Japan, okay, lend it in the U.S., hedge the currency risk, and there you go. Okay, so I don't want to read too much into it, okay, but at the same time, you know, it's still a very, it's not very, it's still much smaller risk than it was back here and back here. All right. So, the more we go into negative interest rates, the worse off I think it's going to be. That's just my view. We'll see how this works out. But first, we got to take care of COVID. Once we, take care of COVID, then we can start worrying about the economy. Okay. And again, you can open up. You can make pretend it doesn't exist. You can lie about the numbers. You can do whatever it is that you want to do. I don't care. People are still not going to feel comfortable like they did back in January 2020. And that is deadly to a consumer-based economy. 70% of GDP is consumption. And if you want to just maintain where we were back in January 2020, then you have to meet the same kind of consumption. I don't think that's possible. Okay. So you can give out all the $600 checks that you want. You're not going to get the same level of consumption anytime soon. And when you're seeing that pent up demand show up right after lockdown or right after the shock, and people, suddenly said, okay, I'm going to put off buying whatever it is I have to buy for another, 2, 3 months, and then they go out and they buy what they have to buy, and you're going to see that spike in the data. It's not a recovery; it's just pent up demand. As soon as that pent up demand goes away, guess what? Stagnation. And that's where we are now. And this is where I'm saying the fatigue is setting in now. Anyway, let's see how I get out of this one now. Okay, we're back. Good. So, anyway, let's go back to the NASDAQ, see what it's doing. Straight up. There you go. Failed move comes fast move in the opposite direction, right back up to the resistance area. Okay. Still biased to the downside. It has to break out. And it's 3:46 in the afternoon. Okay. Again, this is a very strange structure. Sorry, I was looking at something. Yeah, it's a very strange structure, and I don't trust anything that this thing is going to do. Other than go down. Why? Because that's the message of the market. Okay. We explored now again the upper area here. The upper area of the 70%. Okay. This is more elongated. All right. But this is a lot more dense. So we'll see. We'll see how this plays out. Oops. Again, just because you're able to read a chart correctly and you're seeing what it's doing doesn't necessarily mean you're going to take the trade, right? You have to understand that. You want to take the best trades. To me, if I was online, the best trade would be to short right here, right there. That's a confluence of resistance. Okay? And the risk reward is what? The reward is all of this, potentially. All of that. My risk is what? That it breaks out, right? Even if I put the stop up there, okay? It's a very nice risk reward area. And that's the point. That's the point, right? All this waves and structures and chart reading is about identifying the good risk reward areas. S&P 500 is breaking down. It's not the same thing. 10 minutes left to go in the session. Let's kind of do a little rundown. New York Stock Exchange is down 0.83, Dow down 0.76, S&P down 0.3, Nasdaq 0.8 up, and small caps down 0.7. All right. S&P is failing right at that 63-day moving average again. All right. So here's another example where you don't have a very clear picture right now, right? Let me get used to this thing. All right. So you came down. What's it trying to do? Break down. How good of a job is it doing? Not very. Comes back in, comes back down. What do you do with this? Nothing. Nothing. The bias is definitely to the downside, but just because it crossed this line, you don't take the trade every single time. You're getting whipsawed. Right? Oops. You're getting whipsawed. And that's why I say, Just because it crossed the line doesn't necessarily mean that you want to take the trade. Now, if you go back here, right, you had that thrust up move, and then what did it do? It consolidated. This is textbook. You want that consolidation, and then you're expecting the next move up because it's a high base. Okay, it's absorbing. Prices accept it there for whatever reason. All right. So we got another 8 minutes left to go in the session. Anybody have any questions? We lost a few guys. All right. See, right back into structure. So now, is this move sufficient enough to expand the structure? I would say yes, right? So you can expand it now, and what you end up is with this, just sideways, right? Just sideways. Remember, if it's not doing what it's supposed to do, that means it's doing something else, right? You just can't see it yet. You have to wait. Don't try to force trades. Uh, that's about it for today. Nothing, no fireworks, no nothing, just a lot of noise. We got the move up clearly from the inverse head and shoulders. It failed. It's going sideways. You know, this one, Nasdaq is continuing to rise. We know where that is. And again, so long as price remains below this area, the bias is to the downside. All right. So we got another 5 minutes left. Let's see what the last 5 minutes does, because usually in volatile, bearish type markets, weird things happen, right? In terms of earnings, a lot of people love to guess what the earnings are going to be. Is it going to be good? Is it going to be good enough? Is it going to be spectacular? It's a waste of time. Okay. Do you remember what the last earning calls did? Right. What did Apple do? Let's take a look at Apple real quick. Oh, earnings were this and earnings were that for Apple and da 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 and blah 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 and the new iPhone and whatever. What happened? Sold off. Gapped up and sold off. Don't guess. Don't do these things. You're really doing yourself a disservice if you're doing that. All right. Earnings are just a snapshot of what happened, not what's happening. Right? It's nice to hear what they say, what they see, and that's okay. But you don't want to be making bets. That's casino shit. All right. That's for the casino. Go to the casino if you want to do that. All right. More or less, price likes the point of control today, and that's about it. Nothing, just garbage. I'll be honest with you. I would think that this would be a lot more volatile than it has been. All right. For the guys the not subscribers, come down patreon.com/realmacro, and you can subscribe 24 hours live chats and get a lot more content. Also, don't forget to like and subscribe. You'll get the notification when I'm going to make another live video or post a video publicly. And if something funky happens in the middle of the night or whatever, I'll definitely be making videos. All right. So we got a nice megaphone structure, thrust up move, and it's failing. Back to the point of control. Less than a minute and a half left. VIX is pushing back up again. For the VIX being as high as it is, and for the market to be as sluggish as it is very strange. It's truly very strange. Yeah, transportations continue to fall. Right, and there's market close, right? And transportations close at the bottom. Nasdaq is still in a holding pattern. Okay, so that's it. All right, guys. Thank you very much. Again, don't forget to like and subscribe. Come down to patreon.com/realmacro and subscribe. All right. Take care. I'll talk to you guys tomorrow. Have a good night.